Lawmakers in the U.S. held a meeting with the Federal Reserve and Federal Deposit Insurance Corporation on Friday to discuss the swift and stunning collapse of Silicon Valley Bank, SVB. Democratic U.S. Representative Maxine Waters reportedly discussed with officials from the two federal bank regulators, as well as the Treasury Department, hours after SVB collapsed. Lawmakers from both the Democratic Party and the Republican Party were present at the meetings. "I am alarmed by the failure of Silicon Valley Bank, which marks the second largest bank failure in U.S. history," Waters reportedly said in a statement, adding that she is closely monitoring and convening. She added, "I appreciate the DFPI and the FDIC for taking decisive action today, and I remain confident in America's financial markets and the ability of our regulators to protect consumers and investors." Silicon Valley Bank, one of the most popular lenders to Silicon Valley tech and growth startups. On Friday, the federal agency took control of the bank and created the Deposit Insurance National Bank of Santa Clara, which now holds the insured deposits from SVB. Several other lawmakers have also said they were also following the situation. In a Friday tweet, Representative Ro Khanna said he reached out to both the White House and the Treasury Department to discuss the situation with the bank. Furthermore, U.S. Treasury Secretary Janet Yellen met with banking regulators, including the FDIC, on Friday to discuss the collapse of SVB. In a statement, she said that the banking system remains resilient, and regulators have effective tools to address this type of event. Notably, the swift collapse of Silicon Valley Bank came just 2 days after crypto-friendly bank Silvergate collapsed. As reported, Silvergate Bank's parent company, Silvergate Capital Corporation, announced Wednesday that it has decided to wind down its operations and liquidate its subsidiary. Silvergate was among the lenders hit hardest by the fall of FTX in November last year. The crypto bank suffered a run following the collapse of FTX and had to sell $5.2 billion of debt securities it was holding on its balance sheet at a significant loss to cover around $8.1 billion in user withdrawals. Meanwhile, the aggravating user sentiment around the banking sector has seen the shares of another crypto-friendly, Signature Bank, go downhill. The bank's shares were down nearly 23% on Friday and more than 37% since the start of the week. While venture capital firms and tech startups were most severely affected by the collapse of Silicon Valley Bank, some major crypto companies have also revealed exposure to the bank. For one, USDC issuer Circle has $3.3 billion of its USDC reserves at the collapsed lender.